Hey everyone, welcome back. Why NIO stocks has fallen today? It is an open secret at the moment that the NIO stocks has significantly fallen in the last few days. Now this is actually quite significant because in the last month the NIO shares have been as high as $22. Now it's only $12.88. So significantly losing value. In fact, the NIO shares in the last month has lost almost as half of its value. Almost half the entire company value. That's at least $17 to $18 billion. It is really fascinating because this comes at a really interesting time when NIO is expanding its company into other countries such as the European market. NIO's launching the ET7, EL7 and the ET5 vehicles in Germany, Netherlands, Denmark and Sweden. And it's recently been confirmed that NIO has plans to branch off in the UK as well. In fact, NIO has plans to bring the ET5 vehicle into the UK in 2023, I believe. Now, the first of these vehicles going into Europe is the ET7. It's available to order in Germany, the Netherlands, Denmark and Sweden, with deliveries penciled in for October 16th. Pre-order for the EL7 and ET5 are also open, and EVs will be delivered to customers starting in January and March of 2023 respectively. So despite all of this, despite the fact that NIO has been doing increasingly well in China with delivery numbers, the shares are losing value. Now this is good for me as an investor because I want to buy when the shares are cheap. But it's particularly strange to look upon how NIO has been losing value when they really shouldn't be. Not at this stage when the company is expanding and it's doing it in a really good way. So NIO is the third biggest EV company by market cap right now. Even Rivian is a bigger company by market cap, and Rivian is delivering significantly less vehicles. However, Rivian is going for 25,000 vehicles delivered this year. That's impressive. Rivian is doing impressively well, so good for Rivian. However, it is not just NIO that has been doing bad recently. Other EV companies like Tesla has been losing value as well. Lucid, Li Auto, and let's not forget our favorite Polestar. Polestar has been losing a lot of value as well. XPeng has been losing an incredible amount of value. In fact, so much that Polestar is now more valuable than XPeng in terms of market cap. And that's quite interesting because not many people expected such an occurrence. Well, NIO is working to expand beyond China. But right now, investors are trading the company knowing its main market is still in China. That's partly why NIO shares are dumping, apparently. Yes, obviously, the majority of sales of NIO vehicles will occur in China for the foreseeable future. NIO is only starting their expansion in the European market. It will take them some time to be fully confident in the European market. But so far, it's looking good. They're even putting up charging stations. NIO is even installing battery swap stations in Europe as well. So it's very ambitious about this plan, and it's not a half-assed deal. It is something that is important to the company, and they can show that. Now, last week, NIO outlined a strategy to continue to push into the European market. That plan includes selling 3 of the smart electric vehicles in Germany, the Netherlands, Denmark and Sweden, as well as building 120 of its power swap charging stations throughout next year. These are the swap-in battery stations. It also includes new mass market brands that have yet to be named. But the stock is trading lower and lower each day. And that's raising a lot of questions for a lot of people. Like, what do these traders, what do these investors know that we don't know? And what that's doing, it's causing an avalanche effect. The entire market is in panic right now because they're confused as to why exactly NIO is losing so much value, especially in the last 30 days. Now, you see, when you look at NIO in the last 6 months, it doesn't look so bad. In fact, the last time NIO was at the current price was in May this year. NIO was $12.71. That was pretty low compared to where it is right now. In fact, it's almost the exact price. However, in June the 24th this year, NIO was $24. It was doing incredibly well. So from a low price of $12, you can see that the price rallied back up and doubled. The price doubled, which means that the market cap doubled. The market cap must have been $44 billion. So keep that in mind right now. What is occurring right now has occurred before. We've seen this happen before. Will the rest of October be a great month for NIO? Will they start going back up in share price? Will November be a great month for NIO? The share price cannot stay this cheap for a very long time. People will be buying. After the panic is worn off, people will start buying back into the company. Mark my words, the share price will start going back up gradually. But right now, let's just enjoy the market because it's so cheap for really good companies, undervalued companies such as NIO. As a company is much more valuable in the hands of investors compared to Rivian, because Rivian right now is overvalued, NIO is undervalued, so NIO is automatically more valuable for investors right now. Rivian is actually more dangerous for investors because it's so volatile. At any moment, Rivian could fall rapidly in share price. It just takes a little bit of panic in the market to trigger this phenomenon. And is that possible in the share market? Of course it is. The financial market, this happens all the time. Now, NIO reported its best ever vehicle delivery period, shipping more than 31,000 electric vehicles in the third quarter. That was an increase of 29% year over year. With the vast amount of models being sold domestically in China, the company will continue to rely on a growing market in China as it also tries to increase its market shares in Europe. NIO will ship its 2 sedan models, one of its SUV models into Europe initially, but NIO represents and co-founder Li Hongqin said that at the Berlin event last week that new mass market brand will also be sold in Europe beginning in 2024. Now, truth to be told, while it's completely normal to panic about these things, I'm here to relieve your stress. On the off chance that there is something much more serious that's going on in the company that the public, we, do not know about as of yet, it's a small possibility, but it is possible. That's why I always say this is not financial advice because it isn't. I'm strictly just sharing my opinion. But I think this low price of NIO has occurred before. But in the case of the share price falling by so much, I think it's just a typical occurrence that tends to happen from time to time when the market hits a particularly bad period, and the EV market is struggling right now. If you don't believe me, take a look at Tesla. In the last month, even they've been losing plenty of value. In fact, within the last month, the Tesla shares have been as high as $312. It's now $215. It's lost almost $100. The market cap is $675 billion. It's absolutely dirt cheap. This is a company that could produce over 400 to 500,000 EVs in Q4 of this year alone. That's absolutely insane. So I can promise you this cheap price for EV shares, it's not going to last for too long, ladies and gents. It's only temporary. So thank you for watching. Subscribe to see more. And of course, I'll see you in our next video. Remember to leave a like and a comment.